The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Morning everyone, how are you? Good, right, okay, let's get that over and done with and let's tell you what the headlines are because you're watching Squawk Box. So the Dow sees its 24th record close of the year as Wall Street ekes out gains ahead of closely watched results from the AI darling Nvidia after the bell today. Novonesis hikes its full-year outlook after a 10% jump in sales growth over the second quarter. We're going to be speaking to the CEO, Esther Beger. That's at 8:15 Central European Time.
Former President Donald Trump is hit with a fresh indictment. That's after the Special Counsel over his attempts to overturn his loss in the 2020 election. And shares in Supermicro fall as the server maker is hit by allegations of accounting manipulation from short seller Hindenburg Research.
We've got 3 hours of intensity of markets. I just want to say you something beautiful and calm first of all as well. No, not Arabile. This. Look at that. That's London this morning. Isn't that absolutely stunning, isn't it? Look at that sky. I don't believe in red sky at night. Shepherd's light. Red sky in the morning, shepherd's warning, because they're all red in the right conditions, aren't they? Do you want to have a look at the Capitol Hill as well? There's something equally beautiful. Have we got it, Roger? Have you not got it? It's just a lovely, it just says beautiful shots. These are live shots. Look at that. Isn't it amazing how similar the Capitol Hill Dome is to St. Paul's? Anyway, that's enough of that. I was just looking at lovely pictures. Talking of lovely pictures with great domes.
Are we talking about me or the market? Great domes, I'm going to assume. Wow. Anyway.
Sorry, it just came to me. Sorry. I genuinely didn't plan that.
We've just started the show. You know we have 3 hours to go, right, Steve?
You look beautiful. You look as beautiful as St. Paul's Cathedral. Perhaps slightly more beautiful, Arabile.
Definitely not as aged, that's for sure.
Talking about me now?
I am? No. Let's rather leave it. Nonetheless, let's continue with the show, why don't we, right? If there's something we're going to mention a lot today, Steve's already done it once. We're going to keep doing it across the show, actually. Maybe we should have a count at the bottom of the screen today. Just find out how many times we say the word Nvidia. Well, that's 2 times now already for the show. We'll find out how many times we get to say that because that's going to be the important element then to focus on then today, right? We're going to get those earnings coming out of that AI darling then. And it may be pivotal to many things here. One, the semiconductor play and that AI trade story, right? Just how much demand is there still within that? Is there supply chain constraints there? Of course, the Blackwell chips have been ones to really put into question, but also for the market picture overall. I mean, Nvidia's share price, while still high, is definitely off its July highs then as well. That record territory that it had hit when it had gone up to around $3 trillion as a share price. So that will be keenly focused on as well as a share stock story. But overall, yesterday's market picture, benign to say the least, and even a small eking out of a gain then for the Dow Jones Industrial, managing then to hit another record high, but only just as it gained 10 points in yesterday's trade. And here's that story then around that AI darling, isn't it? Because here's where we literally are then when it comes to the story. Only just off those July highs. So will it continue to find the momentum to move a little bit higher and edge towards 150? There's some price targets out there, even sitting with 180 for this share price then. So is there a little bit more upward momentum? Again, the demand story, the AI trade story, that's going to be quite important to this number as it releases its earnings. And that runway with regards to demand, I mean, we're seeing plus $50 billion being spent by some of the other mega cap companies then on this AI trend. So that will be quite important to focus in on. On the other side, quick look at treasuries here. Then treasuries moved up yesterday a little bit then while the gap between the 2-year and the 10-year actually narrowed to what was the smallest in around 3 weeks. One might say that maybe that indicates then that the market is expecting the Fed to begin easing rates very soon. You're seeing it then 3.82 for the 10-year. Look at that 2-year note then, 3.87. So just around 5 basis points there between the two. On your dollar cross front, then the dollar is near its lowest level in more than a year, around 13 months, in fact, then against the basket of currencies. The dollar index itself is actually down around 5%. Since its July highs, then on account of what looks like those upcoming rate cuts then that the market is pretty much pricing into a lot of this movement. For the month of August, the dollar is also, that dollar index, around 3% lower, putting it on track for the biggest monthly decline since November 2022. We're back below 145 then for dollar yen then. And pretty stable then across sterling and euro there. 111.58 there, 132. We'll significantly unpack those moves as well across the show. Steve.
Thanks. Right. Our US colleagues asked the former Cleveland Fed President Loretta Mester and BlackRock Global Fixed Income CEO Rick Rieder for their take on what's next for the Fed.
If you think about what the Fed has been doing and how it usually reacts, I mean, it wants to be doing this sort of very deliberately. So in my read, that would be 25 basis points, and a series of 25 basis points would be appropriate at this point, given where the economy is, and importantly, where the FOMC likely thinks the economy is going.
We've priced in, the market's now pricing in 4 cuts for 24 and 9 cuts through next year, getting the funds rate down to 3. So the rate market is certainly anticipating at least a 50 in there, and going 100 basis points for the balance of this year. So the market's already priced it in.
Right. Okay. So new records released by the Fed showed that directors at the New York and Chicago Federal Reserve banks voted to lower the rate charged to commercial banks from the Fed's discount window in July. The boards of the regional Federal Reserves can't change the discount rate without approval from the Board of Governors in Washington. But investors could take the vote as a signal that New York's John Williams and Chicago's Austin Goolsbee were inclined to support a move. The two governors were part of the FOMC's unanimous decision to hold rates at 5.25% to 5.5% in July, though minutes from that meeting later showed several officials saw a plausible case for a cut. Paul Middleton is Global Equities Senior Portfolio Manager at Mirabeau Asset Management. Good morning to you, sir. Okay, 25's in the price. Does it matter if they go 50 basis points in September, or actually if they say, well, we're going to do 25, but the bias is certainly for more cuts to come?
Good morning. That's a good question. And I think the risk is that if you go for a 50 basis point cut in September, then the market's going to worry that the Fed has seen something that nobody else has seen, that they are more worried about something, and that's going to spook the market. So I would have thought that Fed will go quite softly on this, especially at the start, and will react on an ongoing basis and go up to 50 later on. But the first one I would have thought would have to be 25.
Yeah, I couldn't agree with you more, Paul. It would just seem panicky, given the fact that actually most data has been fairly in line with expectations. There was one payrolls report that upset the horses in early August. Apart from that, if you look at the broader suite of data from retail sales, consumer habits, business inventories, CPE, core PCE, you name it, everything's quite stately in terms of its moves at the moment. Is the market getting too exacerbated about the random number generator that payrolls is, that has always been throughout our careers?
I think we're just in a very unique position at the moment where we haven't had any cuts for a long time. We're in August, the liquidity is low, and the data are slowing to an extent, but looking okay at the same time. And so it's just that pace of slowdown, which is a question in everyone's minds. And you can see that with that payroll number at the beginning of August, that the market is nervous about it, that when those payrolls disappointed, there was an extreme reaction to it. The yields fell to 3.8 almost immediately. And the market started looking for much broader set of market leaders, including some defensive areas like REITs, but also some more recovery type names. And so the market has been gyrating between these hard and soft landing outcomes for the last month or so, and we've become very sensitive to data at the moment because of that those fears.
So Paul, would you say then that the recession or a possible recession or any kind of recession, if that was ever possible, is the biggest risk then to the market upside, or geopolitics, US election risk? How much do those feature?
Well, you're quite right that the pure fact that we have so many big outcomes at the moment and big question marks is quite significant. But I would have thought that the recession and the rate of change of policy is going to be the biggest driver of returns over the next 6 months. I mean, you look at the election at the moment, it feels like it's a bit of a toss-up, and that will change with debates coming up in the next couple of weeks. We've got the Middle East going on, and that's just ramped up again, unfortunately. We've had earnings are coming to a close now, but have been broadly supportive of a benign environment. But yeah, I would have thought that the rate at which data are slowing is the key question for the markets over the next 6 months.
So, Paul, then where are you putting your money then at this time, especially when you look at a market that maybe is in search of leadership here, considering that the mega caps themselves are perhaps rising, but not as much as they were before?
Yeah, I mean, it's good for the market that the market has broadened out. And 2 months ago that we were seeing all those extremes of the low number of names beating the S&P, and that was difficult for money managers. But now with this changing narrative and with some question marks in the semi space, you have seen that broadening out. And so what are we looking for? We are stock pickers. We invest thematically. We use those themes to identify areas of structural growth. And we think structural growth is important at a time when economic growth is being questioned and where there are no macro tailwinds. And so, for example, the areas that we're looking at and have exposure to within the portfolios would be the REITs. You can see that since the beginning of August, REITs have outperformed. This follows a couple of years of underperformance, with high rates being one of the factors within that. And so one of the areas that we like within the REITs is American Tower, the tower telco operator. And again, you've had high rates for a couple of years, which is a headwind on valuation and on their debt. And you've also had slower growth for the last couple of years, but that's about to accelerate as AT&T increase their network spend. And that comes in conjunction with them coming out of the Indian market. The Indian market is less concentrated, it's less attractive. And so you've got a pure growth story, much more US focused. US growth is accelerating and rates are coming down all at the same time. And we think that kind of stock should do well in this kind of market positioning.
That's great, Paul. Some very specific stuff. Thanks for getting up early for us. Much appreciated, sir. Paul Middleton, Global Equities Senior Portfolio Manager at Mirabeau Asset Management. Well, a lot of tangible ideas there as well. Look, some reads I read, like this next one, I think, what did I learn? You know, the whole point about this show is that you learn something, you can make a decision. Well, I don't know, you judge for yourself. The ECB Governing Council member, Klaas Knot, has said the central bank can cut rates gradually if inflation continues on its downward track. Okay, but the more data is needed before a decision can be made. Okay, the next ECB decision is due on 12th September. I appreciate why we put this news out there, because we have to, because it's important for you to know what these important people are saying. But hands up who learned something new from that. Let me go through it again. And don't get me wrong, we have to report this because it's the news. You want to hear what the Fed governors are saying, what the MPC is saying in the UK, what the BOJ is saying. But when you don't learn anything, look, okay, Klaas Knot just said rates can gradually go down if inflation continues on its downward track. Yeah, right. You know, I'll tell that to I don't know,
I think
undergraduate studying economics. I mean, I don't know. More data's needed. Again, you know, I'm learning nothing from this stuff from a lot of these policymakers. I wonder why they speak sometimes. I like Klaas Knot. He's a great guy. Was it the interviewee? Didn't get enough out of him. But tell me something I don't know, guys. Tell me something I don't know. About Nvidia. Tell me something about Nvidia I don't know.
Very tough to do so. But nonetheless,
Well,
I'll tell you that it's coming through. That's definitely what we'll focus on. Nvidia drawing the curtain then on the earnings season. We'll discuss what investors are looking out for after the bell tonight. Plus, which long-time members of the FTSE 100 look likely to lose their spots in the UK's flagship index. We'll look at which big names are set for the chop. And later this morning, we'll get numbers then out of Lego. We'll hear from the toy maker's CEO, that's Niels Christiansen. It's coming up at 9 o'clock CET.
CNBC Connect is back in Bangkok, Thailand. Join the world's top entrepreneurs and C-suite executives for an invite-only leadership retreat. On the agenda, powering innovation and growth in Asia. Is AI transforming industries and creating opportunities? And get insights on building sustainable and resilient businesses. Be part of Managing Asia Live. Network and join an interactive brainstorm session. CNBC Connect, powering innovation and growth in Asia on September 4. Register now.
Welcome back. Sorry, I'm doing three things, but you just have to wait. Okay, fine, I'm ready. Okay. Novonesis raised its full-year outlook after reporting a 10% growth in organic pro forma sales over the second quarter. The Danish biotechnology company held a strong momentum going into the first months of the second half, adding that the integration of Christian Hansen is progressing very well. We are speaking to the CEO, Esther Berger, later today. Don't miss that interview, and we'll do that I'll tell you what, we'll do it in exactly 57 minutes time. How about that? Right, moving on. Prudential has posted a 9% rise in first half operating profit, boosted by a rebound of sales in Hong Kong. The insurer says it's confident of hitting its strategic targets by 2027, adding that it's focused on more effectively converting its new business profit to cash. Elsewhere, shares of Nordstrom are higher in extended trade after the US retailer posted better than expected earnings in the second quarter. EPS came in at 96 cents per share against forecasts of 71 cents per share, whilst revenue came just shy of expectations at $3.89 billion. In a news release, the Nordstrom CEO, Eric Nordstrom, I wonder if he's related, said the company is optimistic about the second half of the year despite issuing cautious guidance. And shares in Fortescue have turned negative. Let's have a look. 2.2% easier after earlier hitting a 4-week high. The Australian listed miner missing full-year earnings estimates for profits. The world's fourth largest iron ore miner also announcing a higher than expected final dividend. Fortescue added that it's on track to begin green iron production. What does that mean? Green iron production at a pilot plant next year as it bids to meet incoming demand out of China. Right, CEO Dino Otranto told CNBC the slowdown in China's property sector is being offset by growth in other industries.
We certainly are seeing things change in the Chinese market, albeit somewhat of a slowdown in the property sector has been more than compensated for in other sectors. And we're quite happy that the Chinese market in itself is maturing across new industries, EV, renewable energy, for instance. Last year alone, more than $1 trillion was invested in China in nearly 300 gigawatts of solar and wind. We see that investment continuing. So for us as Fortescue, we see the demand for greener products into the future actually improving over time as China transforms its energy profile.
Now, JD Sports-backed protein shake maker, that's Applied Nutrition, is reportedly lining up a London IPO next quarter. In a statement seen by media outlets, the UK-based firm said it believes London is an exceptional home for growth companies. Reporting by our sister channel Sky News earlier this year suggested the firm could seek a valuation as high as £1 billion, though recent reporting has trimmed that figure by half. Now, if the listing were to go ahead, it would mark the city's 9th IPO this year. And Burberry could lose its spot on the FTSE 100 after 15 years in the blue chip index. That's after FTSE Russell flagged it and EasyJet as potential candidates for relegation to the mid-cap FTSE 250 index. This amid a more than 50% decline for the luxury name so far this year. But EasyJet could have a last-minute reprieve. That's after it surged almost 7% on Tuesday among a broader lift for travel names. Now, the rebalancing could bring good news for Raspberry Pi, though, after the index provider said it could be moved into the FTSE 250 next month. Only a matter of weeks since its June IPO. Confirmed rebalancing changes are said to be announced after the market close on September the 4th. That's based on data from the previous trading day before the rebalancing itself happens on the 20th. This is a very interesting market picture then on here. I mean, where do we start? Shall we start with Burberry then ultimately said to possibly lose its... just looking at the share
Why
price
does it
then
matter? Tell me why it matters. And the answer is it doesn't, by the way. So go ahead. So there, I've given you the clue.
You're right. It losing its place doesn't matter. But what I think matters just overall is just if there was ever a worsening sentiment around a story, it's definitely this,
I think you're right. I think actually you probably hit on the one thing that does matter is that it's a bit of sentiment as well. Yeah. There is a bit of kudos about being in the FTSE 100, about being one of the top 100 companies. But there was a time, and I've studied this for a large part of my career, when it actually mattered whether you were in the FTSE 100 or not, because so many of the investors out there, the asset managers, were primarily tracking the FTSE 100 as a greater focus than the 250 or the small cap, what have you. Nowadays, less than ever does it matter to global portfolio managers, to international portfolio managers who are putting together a broader portfolio, whether a stock is in the FTSE or not. There are less trackers attached to it as well. What it does do, and it is still a little bit interesting, is a lot of passives, if they are tracking the FTSE 100, have to either buy or sell based on that inclusion or demotion from the FTSE, or inclusion or demotion from the 250 as well. So for a degree of trackers, there is a little bit in there as well. But to be honest, it's very often negated already by the fact that the hedges, more active traders, are already ahead of this. They'll look at who's getting demoted, who's getting promoted, and say, well, we know that there has to be a bit of passive action on the back of this once it actually happens. Ergo, we will front run this as well, totally legally, by the way. So there is a little bit of action around that announcement as well, around those movements as well. But there is less tracking action on the... And I only know this because I keep asking people about it, and they say not so much anymore as well. But in terms of the broader sentiment towards the sector, you're absolutely right. EasyJet, which has been absolutely pummeled off its highs. And I did a bit of work on this one, and it's kind of trading. I don't know, Roger, have you got a 5-year on this one as well? It's kind of trading roughly at its mean, maybe slightly above its mean of COVID. Now, when you think about it, are things no better for this stock? You can see 2020. If you look at kind of 2020, 2021, it's roughly there or thereabouts. Certainly no better than the mean of that line as well, maybe slightly worse. So are things worse than they were during COVID? I find that an interesting premise as well. Trades on 7 times forward. It's not the only stock that's under a lot of pressure as well. And you've seen noise from, we've had Wizz Air's CEO in, we've spoken to Johan Lundgren himself from EasyJet, we've spoken to Michael Leary's team as well. And the fact is the pricing environment is incredibly tough for these people as well. It is a soft pricing environment. I'm pretty sure there was news out already from Ryanair this week just confirming that soft summer environment and soft pricing environment as well. So a tough environment for them. And we've spoken ad infinitum about the problems for the luxury players and Burberry specifically. So I don't know if we need to go into that one anymore.
Of course. I mean, just last year, April was when it actually hit its highs of around 26 or so. And now 68% weaker then ultimately for the share price then as well. So yeah, significant drawdown really that you've seen.
Just want to have a quick look actually. I'm just going to look myself. I don't know if the team have got a British Airways board, International Consolidated Airlines as well. You look at these valuations. I mean, if I tell you that EasyJet, as I just did, is trading on 6.97 times forward as well. BA's owner, on the screen, thanks for that, whoever got that one ready quickly, thank you, is Sophie again, 2 days in a row, up, I know it's a job, but she's good at it, 4 times forward. 4 times forward for an airline that, well, I mean, what you tell me, you spoke to the CEO, do they think they're in a decent position?
They certainly thought they were. They're actually looking at other areas in which they can grow in as well. That Spain route being a key component for them in terms of growth areas to kind of fly it as well. They think LATAM is doing fairly well as a destination. So they seem to think that growth is still possible in this space actually as well. So yeah, it looks like, from the CEO's point of view anyway, it looks like there could be upside.
I just had a look at Southwest actually, just to kind of see what's going on in the States, and it trades at a significant premium to the European players as well. Right, that's it for those anyway. So the demotion, the promotions, it matters, but not as much as it used to, I think is the point.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.